Hello, welcome back. Today we are going to study about the next concept of valuation of asset is investment. So, it is valuation of investment. So, before knowing the how the valuation of investment can be done or prepared by an auditor, let us know what do you mean by investment is. Investment is an amount spent or it is an expenditure made by an investor to buy. What kind of securities can be brought, like the shares, debentures, bonds, mutual funds, etc. The main purpose of investment is to earn profit on the investment made by the investors. The main motto of the investment is what? To get the profit on the investments. All the investors will have the motive, will have the thought that whatever the investment they are making, they have to get the returns on the investment. Is ROI means return on investment. Now, in this case, what happens? So, now, in case of the company is invested in, it may be plant or machinery or some debentures, bonds. So, how the auditor will verify the investments? First one, we'll see. As we all know, the investment, it may consist of investment may be in government bonds or shares or securities, and I have given a diagram here. It says investment on bonds, stockbrokers, that is stock, shares. Then we have real estate, we have mutual funds, we have hedging funds, the common stocks, etc. The investment may be made in different baskets as per the convenience of the investors. Now we will see how the investment will be valued by an auditor. So first one, the auditor should examine whether the company is authorized to make the investment or not. So in case if the company is having the legal right to make the investment, they can invest and they can take the returns. For example, if a person wants to start a business, so even though if you have the capital in his hand, so you need to follow some regulations. We need to obtain the license from the respective authority, and you need to follow the business act, what it says, and you need to pay tax to the government, etc. So here, before making the investment, the auditor should examine whether the company is having the authority to make the investments or not. In case if the company wants to make the investment in real estate, so even they should have the right, they should have the authority to make the investment in investing in the real estate. Second one, you should see whether the legal formalities have been completed. So before making the investment, for example, in case if the company wants to issue the shares to the public, the company, it is not so easy to issue the shares. So they should take the permission from the SEBI, that is Securities and Exchange Board of India. Only then they can issue the shares and raise the capital or raise the investment. So you need to see whether the company, whether the legal formalities have been completed or not for the sake of investment made by the investor. Third one, if the investment are in large number, you should obtain the schedule of investment certified by the responsible official. So, in case if the company has invested in, it may be the shares, it may be in bonds, it is in real estate, it is in stocks, it is in mutual funds. So, at that time, the auditor should obtain the schedule or list of the investments, which is certified, which is truly given by the responsible official. So, the statement should include what this statement should include the investment date of the purchase, that is when for example, if the company is purchasing the shares, so when they are investing, and what is the book value, what is the market price, and the rate and date of interest and tax paid, deducted, etc. So, along with this, the auditor should examine when the investment has been made, what is the book value, what is the market price, and the rate and date of interest they have paid, and the tax deducted, etc. It has to be verified in detail by an auditor. The next one, it is advisable to verify all the investment at a time. The auditor should not postpone his work of verifying the investments. In case if the investment has been made in mutual funds, stocks, and real estate, so all three together the auditor should examine and they need to complete this task. He should not skip the real estate investment, and he has to examine only with the remaining two. So you should not skip any of the investments. So you need to verify all the investment at the time only. Next one, when the investment were in the possession of bank, so the auditor should obtain the certificate from banking authority. So if the investments are with the bank, it may be for safe custody. So at that time, the certificate regarding the same is to be obtained from the bank official. If the investment, like it may be the shares or bonds, has been kept in the bank for safe custody, the auditor should obtain the certificate from the banker. So for what reason the investment has been kept in the bank. Next one. So dividend received on investment should be examined by checking the portfolios of dividend warrants. So what is dividend? Dividend is a part of profit which is issued, which is given by the company to its shareholders. It's a part of profit given by the company to its shareholders. Now, in case if a dividend has been issued, a dividend can be issued maybe half yearly or maybe annually, depending upon the companies. In case if it is received, dividend received on investment should be examined by checking the portfolios of dividend warrants. So dividend warrants provides the information about how much the dividend has been received on investment and to whom the dividend has been paid, has been received, etc. So the details of the dividend should be verified with the help of the counterfile of dividend warrants. Counterfile means acknowledgement of the dividend issued or dividend received by the company. Next, in case of partnership firm, we should examine the partnership deed. So, in case of partnership firm, the partnership deed can be examined to find out the powers and rights of the partners to invest in various types of investment. So, the reason for examining the partnership deed is to know who has the right to power or who has the right to make the investment in various investment securities or various securities. And last one, so we have if they are held as fixed asset, example if they are the trust, so they are valued at cost price. In case if they are held at fixed asset, example like the charitable trust, so the investments are valued at the cost price. So exactly the same price will be taken. And in case if they are held as current assets, they are valued at cost price or the market price, whichever is lesser. So this regarding with the valuation of investments by the auditor.